Hi everyone, welcome back into XLpips YouTube channel. It's your mentor Fabians here, and today's video is going to be about breaker blocks and how we use the breaker blocks to have a very good entry model. Okay, so we should first start by actually defining breaker block. Okay, so the definition of breaker block is the failed order block that indicates a shift in market structure. So I will show you in the illustration on why we say a failed order block indicates a shift in market structure. Okay, so I will show you in the illustrations on how we use that concept. Okay, so it can also act as a support, as a strong support or resistance zone. Okay, so a breaker block is always part of the very strongest support or resistance zone depending on the direction of the market. So if we are expecting to buy, then it's going to act as a very strong resistance. It is a support zone. Okay, so if we're expecting to buy, then our breaker block is going to become a very strong support. Okay, but if we're expecting to sell, then the breaker block is going to act as a very strong resistance zone. Okay, so we'll learn all of this in the coming in a few minutes, because I'm going to actually show you the illustrations on how we can mark the order block. Okay, so I failed bullish order block, which was responsible for pushing price higher, will now be responsible for pushing price lower. So if we had maybe, let's say we had a very a bullish order block, for example, price was moving higher like this, creating breakout structures. Okay, that breakout structure, and down here the discount level we had our bullish order block. Then if price disrespected this, okay, if price break this bullish order block, then this order block here will now be responsible for pushing price lower. Okay, so when price comes back into this area here where we marked our bullish order block, then this is going to act as a resistance zone. Okay, it's going to push price lower. So this is now the breaker block. Okay, so a breaker block is a failed order block, which will indicate also shift in market structure. This, as you can see here, we had our bullish order block here, but then price broke this level and this became a market structure shift, and then we marked this failed order block as a breaker block now, and then price came back here, tap into this area where we had our bullish order block, which is now our breaker block, and then price goes down. Okay, so that's how simple it is. It's vice versa if we are dealing with the failed bearish order block. Okay, so we'll see more examples as we keep on learning. Okay, so we have two types of breaker blocks. We have the bullish breaker block, sorry, and we have the bearish breaker block. Okay, and let me show you the examples, okay, on how we can actually see this. Let me go direct to the example. So this is the bullish breaker block. Okay, this illustration here indicates the bullish breaker block. Okay, so if you look at this area here, you can see price was actually dropping. Okay, we had some sellers entering the market and price was actually forming lower lows and lower highs. Okay, so this is the lower low and this is the lower high, and again we formed this lower low. Okay, but then what happened? We expected price to keep on respecting these lower highs and keeps on breaking these lower lows. Okay, but what happened here is price ended up creating this sell side liquidity here. Okay, and then after that you can see price didn't respect this lower high. Why? Because we reached at this key level here. Okay, we had a key level. Key level can be an order block, or it can be a fair value gap. Okay, or it can be the same breaker block. Okay, and this key level is on the higher time frame, not on the same time frame. Okay, it has to be a higher time frame, not the same time frame. Okay, so if we are in 15 minutes, we cannot call it 15 minutes order block a key level. No, maybe if you have the 4-hour order block, that's going to act as a key level. Okay, or the daily value gap, or the daily order block, that's going to act as a very good key level. So price tapped into this key level, and then we cannot expect to see continuation of sellers in the market. Why? Because price has already tapped into this key level here. Price has tapped into this key level, and the sign here is that we can now expect strength of buyers. Okay, to expect to see buyers entering and pushing price higher, to create a new direction, which is the bullish direction, okay, or the uptrend. Okay, that's why price didn't respect this lower high here and created market structure shift, as I have marked there, that this is market structure shift. And now remember, at this point where we had the lower low, the lower high here, this is where we are always expected to mark our bearish order block. Why? Because we were selling here previously, we were selling here, getting lower lows and lower highs. So at this point where we have the lower high, this is where we were supposed to mark our bearish order block. But right now, what you can see is that price reacted on this key level and bounced to the upside. And what happened is price disrespected this bearish order block. So it has become a failed bearish order block. So this is now a failed bearish order block, okay? Failed order block, a failed bearish order block, okay? Which is now going to become a breaker block. And what kind of a breaker block is going to become a bullish breaker block? Because it's going to be responsible for pushing price higher, okay? So this is now a breaker block, a bullish breaker block at this area, when this lower high where we had our last bearish order block. This is now going to be a point where price is going to return back and respect this area, okay? We can say this is a breakout and retest, okay? Prices went up and disrespected this bearish order block, but then this area is going to become now responsible for pushing price higher, which is now our bullish breaker block, okay? And the breaker block becomes more stronger if it is combined with a fair value gap, okay? So if we have a fair value gap around this leg that caused market structure shift, if there is a fair value gap at the same area where we have this breaker block, that's going to be a more stronger entry model, which is called ICT unicorn model, okay? So let me remove these drawings here, okay? So if we, for example, if we have a fair value gap there, then, and we have this breaker block there, overlapping together, the breaker and the fair value gap overlapping, that's going to create what we call the unicorn model, okay? One of the very strongest entry models, okay? So this is the first example of type of breaker block, which is now, this is our bullish breaker block, okay? Another type is the bearish breaker block, okay? Let me show you directly this one here. So you can see we have it here, okay? Price created liquidity sweep here, which is buy side liquidity. And then after buy side liquidity there, you can see price tap into this key level, the higher time frame key level, okay? Higher time frame key level there. It can be an order block or fair value gap, or it can be also a breaker block on the higher time frame, but it has to be a higher time frame, remember. And as you have seen here, down here we were pushing higher. There was buyers entering the market, okay? And then you can see if we create this kind of structure here, which is like breakout structure, before it became a liquidity, it was like a breakout structure, okay? Because we were bullish. So at this area, this is where we are supposed to mark our bullish order block. But according to the way price is moving, according to the reaction from this key level, you already know that this level is now going to be resistance, okay? It's a resistance point, okay? So if it's a resistance point, it means price is going to change direction from bullish to bearish, which means now the area that we marked as our bullish order block here is going to be disrespected. Price is not going to respect this because we have already seen the idea of price reversing. Why? Because of this key level, okay? Price bounced from this key level, and now we expect price to disrespect this bullish order block. And now this area is going to be an area where we're going to mark it as our market structure shift level, okay? The transition from bullishness to bearishness, from an uptrend into downtrend. This is the sign that now buyers are losing the strength, and now sellers are entering the market, and they're going to control price. Now, this area, which was a bullish order block, now becomes a failed order block because it has been disrespected with this leg, okay? This leg here disrespected this area, which was an area we marked our bullish order block. So now this failed order block is going to become a breaker block, which is now a bearish order block. Why? Because why is it a bearish order block? Because it's going to be responsible for pushing price down, Okay, a continuation of the bearish movement. Okay, that's why you say it's a bearish breaker block, and that's what you can see here. Okay, price bounced from this breaker block and then continue to go down. Remember, if it is overlapping with the fair value gap, then that's going to be a very strong entry point. Okay, and it is what we call a unicorn model. Okay, very strong entry model, a unicorn model. Okay, so that's a simple explanation about the types of breaker blocks and some illustrations. Okay, now let us focus on this part here about the high probability breaker block. Okay, we already know now what's a breaker block. Now there are several steps that we need to follow in order to mark the high probability breaker block. Okay, why am I focusing on the high probability order blocks? And it is because this is the type of breaker block that's going to work. Okay, not every breaker block is going to function. Not every breaker block is going to actually push price in the desired direction. Some breaker blocks are going to be disrespected, and that's what makes other people uh, not take much in time in understanding breaker blocks. So just okay, it's better if I just use order blocks. Why? Because they think like trading from the order blocks going to be safe, because that's where there is an initial push of price in the desired direction. So if we were expecting some bullishness, we know we're going to mark our order block from the initial point where we saw that leg that caused maybe break of structure. Okay, but a breaker block may happen to be at the middle point of that leg, so it's going to be a bit different for some people who are actually not familiar with breaker blocks. But if you take enough time, if you use these important steps in marking your breaker block, I promise you, you're going to see different results, because I believe the breaker block and the fair value gaps are very strong points for actually pushing price high. Okay, they're very strong levels for pushing price high. Now, let's start with the first step. The first step is to focus on the high time frame key level. Okay, so just make sure price has actually reached where we have the high time frame key level. Okay, so for example, it can be an order block, it can be a fair value gap, or it can be a breaker block on the higher time frame. The higher time frame can be daily, can be 4 hour, can be the weekly time frame. Okay, can be the weekly, the daily, or the 4 hour, and some people are actually using the monthly. But to me, I don't like using the monthly because I'm a day trader, so I don't need monthly time frame directional bias to actually look for good setups. Okay, at most I go to the weekly, not to the weekly. Okay, but most of the time I start from the daily, then check on the 4 hour. If I feel like there is no clear direction in these two time frames, then I combine weekly, then check which direction is in the control. Okay, so this is the first step, which is look for the high time frame key level. And if price has already tapped into the high time frame key level, then you can drop down into lower time frame. And when you are in the lower time frame, look for liquidity sweep. Okay, look for liquidity sweep. It can be a liquidity. This liquidity sweep can either be in the higher time frame. Okay, most of the time we have liquidity sweep at key level, which is called the turtle soup. Okay, you may see turtle soup around that area where you have your key level. Okay, for example, you have a key level and price tapped into that key level, and before tapping into that key level, there was liquidity sweep. Okay, so let me show you the example here. Let me show you the example. Okay, so you can see here. You can see here. Okay, so this is the key level. The key level is here, and you can see price tapped into the key level. But when price was approaching this key level, there was this liquidity sweep. So make sure you have this. First, look for the key level. The second thing is look for liquidity sweep. Okay, and if you have checked and you have seen the liquidity sweep, then you can go to the medium time frame and wait for what? Market structure shift. Okay, check for market structure shift. And if you have seen market structure shift already, like here, this market structure shift is not supposed to be on the higher time frame, because that's going to take a lot of time. You are going to check for market structure shift on the lower time frame. It can be the medium time frame, or it can be the lower time frame. Okay, but most will just say it's a lower time frame. Look for market structure shift on the lower time frame, and after you have seen market structure shift on the lower time frame, then that's going to just go and mark your breaker block. Okay, and when you have your breaker block, if there is a fair value gap overlapping with the breaker block, that's going to be high probability breaker block. Okay, so the steps are here. Okay, we're just showing the examples. Look for higher time frame key level when price tapped into key level. Make sure there is a liquidity sweep when prices tap into that key level, and then make sure you see market structure shift. When you have seen market structure shift, mark your breaker block, and then if it is overlapping with a fair value gap, that's going to be high probability breaker block. And then target the next drawn liquidity as your take profit level. Okay, that's how simple it is. Very simple. But if you follow these rules, you're going to actually see different different experience with the use of breaker block, because I know a lot of people have been actually hearing about breaker blocks, and but they don't know how to use them. They find like, why it's going to be very difficult for me to market breaker block, because sometimes price is going down into the area where we have, for example, here, we have the order block down here, and then here we have the breaker block. So a lot of people actually not trusting the breaker block, but they expect price to go to this order block, and but you find out that price is not going to respect this order block. So just going to move from here. After tapping into the breaker block, then price goes high. You find your buy limit, your sell limit, or any of your entry point in this area where you are expected price to come into this order block is not going to be triggered, because price is just going to react on this breaker block and it's going to go higher. Okay, the same way when we are in the opposite direction, if we are actually, the sellers are in control, you will see the same thing happening. Okay, so it's very important to actually consider this. So you can see when we are looking for sales, okay, you can see key level is here, price tapping into the key level. Make sure there is liquidity sweep before or inside this key level. Make sure there is liquidity sweep. It can be before tapping into this key level, or it can be inside this key level on the higher time frame. Here I'm talking about the higher time frame, the daily, the weekly, or the 4-hour time frame. That's good. That's where you're going to actually check for liquidity sweep around the key level, or inside the key level, or before the key level. Okay, before tapping the key level, or after tapping or inside it. Make sure there is a liquidity sweep. But the next step is to look for market structure shift. And this market structure shift, we check it on the lower time frame. Okay, not on the higher time frame. The lower time frame, look for market structure shift. After market structure shift, remember this was now an order block, so it is now a breaker block. Wait for price to come into this breaker block, and make sure this breaker block is overlapping with the fair value gap. An imbalance, another way. Fair value gap. Okay, make sure price is overlapping with the fair value gap. Make sure the breaker block is overlapping with the what? With the fair value gap. Okay, that's going to be high probability breaker block entry model. Okay, so let us check some examples here. You can see this was how this is check on 30 minutes time frame. If you look closely here, you can see how nice this trade was. Okay, you can see how price reacted very nicely. Okay, the first thing was that, look at this liquidity sweep, right? Sell side liquidity happened here, and this was the area around the higher time frame key level. Okay, on the higher time frame, we find there was a reaction on the fair value gap. Okay, the daily fair value gap actually was around this area where we have marked. I've marked this sell side liquidity here. Okay, so after that, what happened is that price went higher, created this change of character, or market structure shift in another way. Okay, so we had market structure shift here because price went down, up a little bit, and then down. So price moving above this region, this is now market structure shift. And after that, what happened is price went down, respected this order block here, okay, on the 30 minutes time frame. And what happened now? What happened is price went higher, disrespected this area here. Okay, remember when we are marking the breaker block here, we are not marking a breaker block. We are not marking it just by, actually, for example, as I've said, breaker is a failed order block, so it is not going to be a strong order block. That's why it is going to fail. Okay, and it is going to become now a breaker block. Immediately after price move above it and disrespect it, it's going to become a breaker block. Okay, and the price is going to actually react on it after a bit. You can see what happened here. Okay, price came down and respected this area, which was now a failed what? It was a failed order block. So that's how it is nice. And you can see it is overlapping with this fair value gap here. It is very, 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 very strong entry model that's going to help you to actually trade without a lot of pressure. Okay. So you can see this is the breaker. As I have explained, a breaker is like this price. Oh, sorry. It's very simple. I think everybody understand what a breaker block is. Price going down, down, getting this market structure shift here, and then it's going to react on this area because this is the area where we have a failed order block. Why? Because this order block was not a strong order block. So it was not a strong order block. Why? Because the direction of bias from the higher time frame was bullish. So we cannot expect for price to respect the bearish order block. Okay, we just wait for price to go above it, break it, and when price is actually reversing now, or we can say is retracing, then mark that breaker, that failed order block as your breaker block, and wait for price to actually tap into it. And if there is a fair value gap overlapping with it, then that's going to make it a high probability trade. So you can see this is the breaker block. So for anyone who missed the entry on this order block down here, who missed the entry here, okay, I mean this area where we mark this order block. If somebody missed the trade here, now can enter here on this breaker block, okay, a re-entry on this breaker block is going to push price more higher. But as you can see the example here, the entry was on this order block. But if you missed the entry on this order block, you can take your entry on this breaker block. Okay, it's going to actually give you another re-entry, and it's going to help you to actually make some profits. Because if you missed this order block down here, this one here, this order block down there, then it means you can enter on this order in this breaker block here, and you can see price going high. That's our first example. Let's take another example. Another example is here. See how breaker blocks works. But if you check on these examples, the entries were on the order blocks. But I'm just showing you how you can actually be somebody. You can actually trade different. Okay, you can take an entry on this order block and then a re-entry on the breaker block. Depends on your trading style. Okay. Let me show you here. So looking at this area here, remember I'm showing you these examples on the lower time frames, okay? These are the entries on the lower time frame. On the higher time frame, there are videos I've created about how you can understand direction bias on the higher time frame and how you can analyze. But these are lower time frame executions. So you can see we had this here, sell side liquidity, okay? Price sweeping this swing low here and expecting price to go higher here after this market structure shift. You can see that market structure shift there. And then price went down, and then up, you can see the market structure shift. Then left behind this order block here, and that's where price came down and tapped into this order block. But if you missed this, entry, okay, on the order block, you can see what happened here is price went higher, left behind this breaker block, okay. See that breaker block. The same example like this. This is the breaker block. Now you expect price to retrace there and goes higher. Is what you can see here is that price went down and then higher here, went above this level. So you expect price to come down here. So this is the breaker block. This one. That's the breaker block. Okay, I've marked it there, the breaker block. So that's going to be your breaker block. Let me mark it so that you may see it clearly. The breaker block is there, okay? And you can see it is overlapping with the fair value gap here. It is overlapping with that imbalance, the fair value gap. So you know you're going to take entry on this level. That's why you see price came down here and went higher, okay? You can see what happened here. Price came down, tapped a bit inside the fair value gap, and the same area that was a breaker block. So immediately you take your entry on this fair value gap, on the opening of this fair value gap, okay, on this point here, the high of this fair value gap, okay. That's where you're going to take your entry And this is going to be a re-entry because the first entry was here on this order block. Okay, if you miss this entry here, take your entry, another entry here, the re-entry on this breaker block overlapping with the fair value gap. Okay, and you can see our price went high very fast. Okay, so that's how it is very nice if you actually have understanding of breaker blocks, because you need to understand that you not only need to have only one type of entry. Okay, you need to have at least two type of entries so that they may help you to actually take trades which are very quality trades. Okay, so if you miss an entry on the order block, you wait for your re-entry on the breaker block. Okay, another example is here. See this very simple example, very nice example. Okay, price created this market structure shift there. Market structure shift. This is a 2-hour time frame, Euro Audi. Okay, and we have this liquidity sweep on the lower time frame. Okay, then price went higher and we had this inducement here. We left behind this order block. You can see price came down into this order block there, and then price went higher, and you can see price came again into this and created this market structure shift here, which is also change of character. And now this region is now going to act as the breaker block. As I have said, it is a failed order block. So this is a failed order block. This is going to act as a breaker block to push price higher. It's going to act as what? As a support level. So this is going to actually push price higher, and you can see it is overlapping with the fair value gap there. See, it is overlapping with the fair value gap. So you're going to take your re-entry here. Take another entry there, the second entry. Okay, the first entry was here. This is your second entry. If you meet the first entry, then you can take your entry on this second point where we have this breaker block overlapping with the fair value gap. Okay, very simple. Okay, another example for a breaker block you can see here. Okay, and you can see there is always liquidity before price goes high. Okay, there's always liquidity even on the lower time frame. You can see all these are lower time frame entries. Okay, so you can see here price went higher. Okay, and what happened is that we had this area which created, this was broken and became a market structure shift level. The area that is going to be broken and create a market structure shift level, that's where you're going to mark your breaker block. That's why you can see this, the failed bearish order block, the last bullish candle before price went down there. This green candle here, this is our breaker block. And you can see it is overlapping with the fair value gap. So you're going to take your entry here. Okay, very nice trade. Okay, very nice. Remember, in order for a breaker block to be a valid order block, there has to be liquidity sweep first. Okay, there has to be liquidity sweep. That's something I forgot to tell you. There has to be liquidity sweep before price goes higher and create this breaker where price is going to react. Okay, if it happens like this, there is no what you call liquidity sweep. If there is no any liquidity sweep like this area is going to be a mitigation block. It's not going to be a breaker block. Very simple understanding. Okay, if there is liquidity sweep like there, like here, if there's liquidity sweep, then this area is going to become a breaker block. But if there was no liquidity sweep, then that means it becomes a what? A mitigation block. So we'll learn about mitigation blocks in another video. But the most important entry model is the use of breaker blocks. Okay, overlapping with fair value gap right there. It makes a high probability entry model. Another example you can see here, how we mark it. So we have this, but how you mark it is very simple. Okay, may confuse you, like asking yourself, am I going to mark this or am I going to mark this? Okay, but the most important way of marking the breaker block is to look for the nearest failed order block like this. This was the nearest failed order block here. So this was going to act as a breaker, and that's why I've marked it as a breaker there. It's a breaker block. It's a bullish breaker block, and you can see there is liquidity sweep there. Okay, so we have liquidity sweep. Even here there is liquidity sweep. So still it's a very strong point where you are going to actually mark as your breaker block. And you can see we have a fair value gap here, an imbalance there. Okay, and you can see price didn't come into this order block. Price didn't. visit this order block. Instead, price just tapped into this breaker and went higher. Okay, so it's very important to actually know how to mark your breaker block so that you may actually not miss a lot of opportunities in the market. Don't just be stuck with one entry model. Don't just be stuck with the use of order blocks. Try to use the breaker block also, because the breaker block is one of the very strongest entry models. Okay, you have seen my examples here. There are just few examples, but there's a lot of examples. Some people are actually trading breaker blocks without even knowing if they are breaker blocks. They're just trading, okay, blindly without knowing what they are just doing, but their entry are based on the breaker blocks. Okay, so you can see here liquidity sweep, market structure shift. Where there is a market structure shift, that's where you're going to mark your breaker block. And you see overlapping is what? Overlapping is a fair value gap. So your entry is going to be on this breaker block. You can see price went higher, tapping into this drawn liquidity, okay, which is buy side liquidity. So it is very simple, guys. So that's it for today. Thank you for your time, and I hope this video was actually educational, and a lot of people are actually going to learn from this. So if you find this video helpful, don't forget to like, comment, share this video to other people, and also don't forget to subscribe to my YouTube channel. Okay, thank you for your time. Until next time, guys, have a wonderful time.